Creating a successful fintech is super tough. I've been fortunate enough to be part of the journey for 2 fintech unicorns, and I've become obsessed with cracking the code. Join me and my guests, all experts in their domain, as we attempt to find the secrets and share them with you. Welcome to the Hive Mind. Welcome back to episode 2 of Fintech Hive Mind. We're still in the studio, and I'm joined by one of my favourite people, author Leda Glyptis, who is unquestionably the oracle of fintech culture. Leda, thank you very much for making the time.
I'm delighted to be here, and also delighted to be called the oracle. I like that.
Excellent. So, we've both been on a bit of a journey since we got to know each other about a year or so ago, and you actually left full-time employee at about the same time. You've been on your own individual mission for a little over a year now.
That's right, yeah.
What's that look like?
It's been amazing, to be honest with you. It has been absolutely amazing. I have found myself enjoying work in a way that I hadn't for a long time. And I was describing this to one of my clients recently, and I said, I'm in this position where I don't have to do any of the filler work that comes with a corporate job, any of the meetings, any of the stuff that takes up so much of your day but doesn't add value. And I don't have politics because it's me and my clients. And so I don't have the things that weigh you down. I can only do, I do the creative stuff, I do the interesting stuff. And as I was telling my client, he said, you just don't eat your vegetables anymore, do you? Well, assuming that we accept all that as a necessary part of working life, then no, I don't. But is it? Is it a necessary part of working life? I don't think it is. So I've been lucky. It's worked out really well, and I'm just enjoying it so much at the moment.
Yeah, I see you everywhere on fintech stages. You were in the Nordics last week?
I was in the Nordics a couple of weeks ago, Ireland last week, and in the States in between. I overdid it a little bit. Let's just say that I'm not as young as I used to be, and I feel it when I've been flying that much. But it has been amazing. It has been truly amazing.
Great. And I saw through one of your posts last week that you're working on another book. I was a little bit hurt that was the first I heard from it, but I think you were dropping breadcrumbs for people to follow. So.
I was, yeah. No, I've been keeping it fairly under wraps because it's a very different format to the first book, and I did research rather than just based on my own observations, and honestly I didn't know how long it would take. So the minute you say I've got a book coming out, people go, when? And you're like, oh, when I finish it. But now I have a manuscript ready, so we're working towards a publication date with my publisher. And it's been a very different emotional journey. Like, you think the second one will be easier, but now I have expectations of myself, whereas the first book is like, I've got a book, yay! It's binary. I didn't have a book, and now I do. Whereas now I have expectations because the first book got some really good reactions, got good reviews, sold well, I guess. Like, J.K. Rowling has still done better than me. The Hobbit apparently still, sold better than me.
Maybe we'll catch up next year.
But so you have expectations, but it has been more of a challenge than I expected. I went into it like second time author. It wasn't like that. But yeah, we're almost there.
What is unsaid? Can you give us a sneak peek? What's the theme?
I can, yeah. So when I was writing the first book, which was, as you know, based on a lot of the work I've done over the years, very similar themes to my blog about the challenges and frustrations of all the obstacles we put in our own way when we try to do the type of work we do in the fintech world. As I was writing that book, I called my publisher and I was like, I don't want to write this anymore. I know the answer to this. I'm done. I want to write about success because there is less of it, but there is enough of it to actually start looking for patterns. And thankfully, my publisher was like, no, you finish this book and then we talk about this as a second idea. So it's been percolating in the back of my mind that we all know why we fail, but not doing all the things we know not to do actually doesn't get you out of the danger zone. It just eliminates some of the disaster areas. So the question is, what do successful digital transformations or digital ventures have in common, if anything? That's the exam question. And actually, they have a fair amount in common. Yeah, sneak preview.
Yeah, there you go. Well, I think you're not going to tell me anymore. But what I love about that is it's the same reason that I wanted to do this. You work for founders, you share time and space with some amazing people, and it struck me once that actually the things that make companies and people successful are often peculiar and unpredictable. They're not the things that you thought. And actually,
no, that's right.
Having a chance to pull on that thread a little bit is a privilege.
You're absolutely right. It is a privilege. And actually, that's how I felt while I was going through the research. Because you get a glimpse into people's private stories, you get a glimpse into people's journeys, the things that were very, very hard, the things that spooked and scared them. And it's a privilege to get that glimpse into their lives and journeys. And actually quite a lot of what comes out of it is actionable. So if somebody's paying attention, they can definitely they can't make the work easier, but they can avoid some mistakes.
And that's it. It's the subject of paying attention. I was talking to someone the other day, they were a little bit dejected about, they'd been a little bit unhappy at work. And when they resigned, their boss had said to them, is there anything that we can do to keep you? And he said, well, I'd talk to you about this, this and this. And so much of what we need to hear, across all walks of life is there if we're just paying attention.
Oh, God, yes. So true. But also, it often is harder than one hopes. I remember my boss at BNY Mellon always said, up close opportunity always looks like hard work. And he's so right. Because, of course, you're looking for the answer, but the answer looks like you have to climb that mountain. That's going to be hard, but that's the answer. You have to climb that mountain. Go climb the mountain. That's the answer.
The difference between simple and easy.
Yeah, exactly. Knowing what it is you need to do doesn't make it's going to be easy or painless, right?
Yeah. One of the things that you've talked about a lot is BNY.
Yeah.
It's been, I think, an incredibly positive experience set against a variety of different other experiences.
Not so good ones.
Without turning this into half an hour of you doing PR for BNY Mellon, can you just talk about a few of the things that culturally made that such an amazing place, things that you've taken with you?
Yeah, no, absolutely. God, there is so much I could say. I would say, looking back, there were a couple of things that were a combination of what BNY Mellon then, was, and also the moment in time. Because I have a particular personality. I'm extremely loyal. I'm extremely inquisitive. And BNY Mellon at the time was a great place for both of those things to coexist. It had great stability in terms of its employee base. It's shifting now. There's a lot of change at the moment. But at the time, most people at BNY Mellon were there for a very long time. So the idea that you would make your home there was very comfortable for people. So I was never made to feel that if I pushed the boundaries too hard, my career was on the line. My promotion might be on the line, my remuneration might be on the line. It's still an organization that keeps standards high. But that thing of, it's not sink or swim because we've asked you to do this, and it's going to be hard. You still have to climb the mountain, but we are aware of the fact that we've asked you to do this. And I had a series of roles that were all needing to do things for the first time. So I worked in business process reengineering for a while, transformation and revenue protection, and then I moved to client-facing technology and innovation. But all of those roles required client-facing work and solving a problem by doing something differently. Not everything would work, and you would have to try ideas and see if they landed with people. Knowing that your neck is not on the chopping block is hugely important. And a lot of banks talk about it, but don't actually do it. So BNY was very much like that. And that idea that you're home now was very, very powerful, but it doesn't go away. And I think one of the interesting things that you see very often, if you leave a business, sometimes you're treated as an alum. Sometimes you're treated like you were never there. And sometimes you're treated like you're dead now. I was having breakfast with some folks at BNY recently, and some of them were very senior when I was there and still are, and some are new. They're part of the new leadership, folks that I've known before. And they brought me in because I happened to be friendly with all of them. We're just having a chat, breakfast, it wasn't work. And as I was leaving, one of the most senior people there said, you should visit more, It's home. You should come home and visit us more. And that feeling of you're part of the extended community, it goes both ways. And I could talk about it for a long time. The other thing that I will say is the only place I've ever worked where I found myself in an unbroken female line of command all the way to the president once. And it happened there. And I haven't seen it happen in many other places, to be honest.
And you made a comment about women being women as part of that, as opposed to, you know, the women in the hierarchy only being there because they had to act like men. You know, that's a horrible thing to say, but
and
I think that's what I inferred from
and I think the main thing is they were very different to each other. And that's what happens when you actually have a diverse culture. You have diversity in your diversity. I think in that group of women, there were some that would act like corporate drones and men.
You're not pointing at me.
No. But you know, the thing you would expect, the very sort of traditional banker behavior that would expect from men and women. But if you have enough of a diverse footprint, your diversity is diverse. And that's lacking. So yeah, I was very happy there. I learned a lot. I achieved a lot, but I was supported in that journey. The expectations were high, but I wasn't the canary in the mine. And I did have a role a few years later where my chief executive said, well, you are the canary in the mine. It's like, this is a terrible story. The canary dies. I don't want to be the canary in the mine. I want to achieve things for you. I don't mind climbing the mountain. But we need to be in this together.
Mm. And it's a huge thing in sales. I was talking with someone actually earlier on today, and we were talking about the culture within banks is, you know, people are quite afraid to stick their neck out because they are worried that they'll be made sacrificial lambs. And that concern is actually not unfounded or irrational.
No, not at all.
And
we have seen, sorry to jump in there, we've seen people, nobody talks about it publicly, but we all know the people who have been sacrificed because of a collective decision, because it's never an individual decision. We know it happens, right? So you're absolutely right.
Yeah. And the culture you're describing at BNY is people are not encouraged, but allowed to be bold and accept that failure is part of that. And so culturally, that whole organization is more likely to take a few chances.
I think that's fair. I would caveat it with two things. One is, it was part of my job. It is never in a big organization like that. It's never, everyone can take chances now, let's go. But when it's part of your job, it has to be backed by the organization. And that has definitely been absent in other organizations. And they didn't do that. You had the courage of their convictions and the honesty of how far we're willing to go. And I think that's the other thing that is very often lacking. You have this bold, open PR, but the reality is very different. So that courage of the convictions and the communication to the teams of, we want you to be creative, but these are the parameters, these are the guardrails. And I think the honesty in that, at the time, you know, I definitely had moments when I was there doing the work, going, oh, we should push harder, we should go further. There are other people out there who are going further, but actually they weren't. They were just not as honest about the guardrails. And the reality is you will go much further if you're honest with yourself about your appetite and your pace. So I think being honest about that and the boundaries of the job is super powerful. The second is you need to also be very honest about what type of failure you're actually willing to entertain. You're happy to have a conversation about things that might get rejected. Does that count as failure? It's uncomfortable, but can we do that? Yes, we can. Can we play around with things and see if we can make them work? Yes, we can. Can we go all the way to go live and fail? Probably not. But no bank can. Again, the honesty about where we're willing to have the experimentation, where we're willing to have things that just don't stick, and where we need to be mindful of our customers and our regulators. Again, that honesty might feel like you're putting a lid on something, but actually you're creating a greater chance of success and greater chance for focused creativity.
Yeah. There's a difference between having a failure and being a failed project. It's completely different things. Yeah. So you've been around, and I think perhaps alongside Simon Taylor, you guys are the most finger on the pulse for innovation happening within fintech at the moment. What are you seeing out there? What's interesting you? Because to be honest, I went through a bit of a period where it felt like it lost its sparkle.
Yeah. I see Sai tends to be more optimistic than me at all times. So he and I go back a long way. We actually met for the first time when he was still at Barclays and I was still at BNY. So we go back a very long way, and he has historically been much more optimistic than me. And I agree with you that we're going through a strange time at the moment where a lot of things are changing, probably for the better. I was with someone earlier today who was like, you go to some of those big trade shows and you realize that the market is not big enough for everyone. So we've been talking, you and I have talked before about this. There's a correction coming in terms of the actual size of the pie and the projected size of the pie. And that's going to be uncomfortable for a lot of people caught at the wrong end of it. And it might not even be that their idea isn't good enough. It might be that they're caught at the wrong sort of moment in their cycle. But I think there's a correction coming. We have a bit of a disconnect between the size of the market and the participants. And that's going to be difficult. We also we've had, I don't want to call it free money, but close to free money for a very long time. Yeah. And we've had a lot of businesses that have been pursuing somebody, Kai Jerusalem, who I interview in my second book, there's a sneak preview for you, calls it false gods. And it's so true. You will always build to what you're measured for. So if you're measured for growth rather than control on your cost to serve, you will focus on growth rather than control on your cost to serve. So we've as an industry have built businesses to a particular set of standards and expectations that need venture capital to feed them. And as that's drying out, we're going to see a lot of businesses going, hold up. And of course, that creates an opportunity for a lot of the established institutions, either on the tech side or the banking side, to breathe easy, take a moment, and maybe buy up quite a lot of stuff. Yeah. So I think it will be an interesting time, but not sparkly for a while.
Yeah, and I think the point you make about the contraction, another chap that I know quite well, Steve Francis, draws diamonds. Like when there's tons of money, people flood into the sector, and when it tightens up, there's got to be a contraction. But just walking around events like Money 2020, and you've got 40 KYC providers that are not distinguishably different in any way, or open banking, and you could roll out a variety of examples. It's uncomfortable.
It is, and yet there seem to be, was there one born every minute kind of thing?
Mm. But shining that optimistic light.
Where's Simon?
No, you can have the optimistic light. What do you think is the more interesting area of technology? I mean, we've had, I still think embedded finance is talked about, but I think that's a bit of an odd subject. What do you think is the most interesting thing for now?
So I think embedded finance hasn't had its moment really yet, because we've approached it as this is shiny, I'd like to play with it, but rather than a commercially driven, this is what I can do with it. But that is to come, because from a regulatory perspective, we have what we need to make it happen. From a tech perspective, we have what we need to make it happen. So it will happen, and it will be great, but don't hold your breath. The thing I think is exciting is actually the unsexy stuff, is the fact that we have technology now that has been maturing at scale, hardened in production with large numbers of transactions going through it, that really allow us to overhaul our infrastructure. So when you're looking at any financial service institution of any age, you should be able to have scalability, resilience, evergreening, and a lower cost to serve at your fingertips with technology that doesn't carry adoption risk. Remember when we started this journey and it was like, we have to do a proof of concept to see whether this works. It works. And it has worked for a long time in our sector. So there are no excuses anymore. So we can actually smash our cost to serve. We can reduce our vulnerabilities. DORA is coming. I can't believe it took me this long to mention DORA. You can actually be compliant, but you're going to need to do the heavy lifting. You know, on the day that we're recording, I actually published a piece about how we need to switch systems off. It's time. So for me, the most exciting thing is that technology will have to become not just the shiny thing that we talk about, but also the truth we live inside our organizations. Because it's been around long enough now. It's time.
And I think maybe you and I are showing our age, that the thing that excites us is actually the mature part of the maturity cycle.
I know.
When it's actually realizing its value rather than, you know, tons of shiny promise.
I think you're right. We are showing our age there. But it's two lessons you would have learned the hard way if you've been around as long as you and I have, right? The first is the POC was never what you were told it was. The thing you're testing is the organization's appetite, not the technology's viability. It took me a while to realize that. I'm naive sometimes. But once you realize that, the conversation then becomes, where's the pain point or the opportunity big enough for people to make that decision? And I do think that as the economy is becoming, actually the economy has become digital, the delta between where financial services entities, even the sexy modern ones are, and where the rest of the world is that is becoming bigger. So the pressure is going to be not your innovation anymore, not the shiny stuff, not the things you do on the side, but like the main shop.
Get it done.
Exactly.
So you're a bit of an oddity. I'll qualify that, insofar as you're one of the few people that I know that has occupied in fintech on both the buyer side, representing banks, yes, and also in a commercial capacity. You know, like me, you advise fintechs on sales and marketing. Yeah. So you've got a lot of exposure to technology providers. What is the thing, like, what are the recurring themes that you see when you go into clients that again and again it's like, oh God, oh no, this issue?
Yeah, so it's which side, the sort of buyer side or the vendor side?
Let's start with the vendor.
I would say that fintech hasn't really woken up and smelled the coffee yet, in that you still see founders who believe they are special and who use that language of, you know, take over the world and it will be different for me because. So I am seeing quite a bit the fact that you will come in. So I'll tell you this example that makes me tear my hair out, because it's like, here we go again, Blair Witch Project. You go in and you say you need to work backwards from the sales cycle, which is going to be a lot longer than you think, and B, from what you will need as a vendor, as a tech vendor, to pass due diligence from a going concern consideration, technology robustness, and cybersecurity, right? If you're going to sell into a regulated entity, these are the questions you're going to get. We're not even talking about the RFP yet, which I'll get to in a second. These are the questions you're going to get. This is what you need to look like. This is how long it's going to take you to have all of these things in place. And this is what your sales cycle looks like. So first of all, start preparing for due diligence now, because it's going to look, they're going to know if you just, painted the fence kind of thing the minute they're walking in the room. And secondly, allowing for the things you need to do and how long it will take. Is your runway as good as you thought it was? And if not, now is the time to do ABC. Now, none of those things sound like they are directly linked to your commercial posture. But then what invariably happens is you have this conversation with a founder, and about 6 to 8 months later, you get a call saying, so I didn't do the thing. All the things you said would happen have happened. What do I do now? And the only answer then is, don't call me. I told you what to do when you had time to do it. So I see a lot of that. I see a lot of, to go back to the thing you said earlier, a lot of people not paying attention, getting the advice, having the information, but still feeling that they somehow will be an exception. I see this a lot on the vendor side. And then there's a scramble to qualify or to fundraise, or you see fire sales as a result of that.
Yeah, and that sales cycle thing is the single biggest thing. that I educate people on again and again. The suggestion that people come out of a first meeting, a first demo, skipping, going, well, we'll get a deal. No, it's got to go through their internal governance and an RFP and an RF.
Yes, and another RFP usually.
Yeah, and all of that, and a POC, and all of those things.
You know what the interesting thing is? I get founders a lot, particularly if they've gotten lucky with one or two deals early on, which happens, right? You meet someone who gets excited about what you do, you get a big deal, and you think, I'll replicate that. I'm like, maybe not. It would be nice if you could, but you can't always. The reality is that there is a lot of very sensible arguments why the sales cycle shouldn't be 18 months, that actually it is inefficient and it wastes resources. So you see a lot of logical posturing that goes, well, it shouldn't be like that because you do this, you do that, therefore you get to a decision. It's wasteful otherwise. And you're like, you're absolutely right. And yet, I keep saying you have to play the game you're in. We all want to change the game, but you can change how you play it. So there are very good reasons, arguably all of them debatable, but there are very good reasons why no single vendor will allow an organization to change the way they buy. You might become an exception because somebody had leftover budget, because something didn't go right, so they had a compressed time frame. There are always externalities that might allow you to collapse.
But they're exceptions.
But they're exceptions. And you need to absolutely grab them when you find them, but also accept that this is the game. It's a long sales cycle, and it's a long sales cycle because of what we said earlier. The vast majority of decision makers want to syndicate support for a big decision because they have seen a lot of their colleagues lose the seat if they overplay their hand, and people don't want to do that.
Do you think that banks and financial services businesses have moved to make the way they buy technology any better?
The bar was low, so I will say yes. But I am, and I referenced this in my first book, I once sat on 2 procurement committees for 2 completely different projects with completely different RFPs and completely different budgets that were so similar to each other that neither the vendors nor us were 100% sure at any one time whether they were talking about the first one or the second one. But for political reasons, they were completely different projects. And one was a payments gateway and the other one was a payments orchestration layer. But fundamentally, the infrastructure needed to be built. So one was a little different, but essentially 90% of the RFP was the same. All the vendors were the same. And the confusion that it caused was immense, but not unusual. So we are definitely getting better. You're seeing a lot of the POCs are actually testing for more sensible things. They're testing integration. They're testing what would it take for the bank to operationalize. I'm seeing more and more competitive POCs rather than long drawn out RFPs. So yes, it's getting better, but it's not getting past that long cycle for true commitment, because that's about people's security inside the organization. In an organization which you don't have, right, where somebody could make a decision and commit to a new software relationship for the next 10 years and spend, $100 million doing it, and know that if it goes wrong or if it's delayed, it won't be their job on the line, then you would get faster decision making, but that won't happen. And arguably, it should be their job on the line if they spend the money poorly, right? So of course, people syndicate, people share the decision so that the responsibility is shared. So yes, we're getting better, but that doesn't collapse the time frame.
One of the things that I've seen is technology has shrunk, and it's become less monolithic, and it's broken up. So what was previously handled by one supplier is now 8. But the result is that the procurement process is still as heavy-handed and therefore expensive, even though the ticket sizes have shrunk. And an example of that once was, and this was a large supermarket chain that is involved in financial services.
I wonder which one.
And when faced with a chance to get a development license, they couldn't, which was 50,000, they had to go through an RFI and an RFP, which had an internal cost of 500,000.
Yeah.
So the cost of the procurement exercise was 10x that of the technology that they were looking to acquire. And I think you're right, banks will always be banks, but there's a kind of a disconnect, I think, between the sales motion, and if ticket sizes are smaller, it almost needs to be more self-serve. But banks they're still quite addicted to the white glove enterprise sales motion from vendors.
Yeah, they are. They're used to it. So you touched on so much there. So I have seen at times, particularly when I've been on the vendor side, banks come and say, look, this is what we want to do. Can you contract all of these other relationships and we contract through you? Or we've had situations where they had that conversation with someone else, and you create this sort of set of Russian dolls to get around that. To be like, okay, I will go through one MSA negotiation, one set of procurement relationships. But of course, once you start doing that, your cost goes up, your oversight goes down. You do it to beat your own procurement machine, but you cause problems. And DORA, DORA is going to bite everyone in the proverbial, because of course, all of these relationships need to be repapered now. You need new SLAs. But the other thing I find interesting, so now that I'm independent, I do a lot of work with big organizations as well as small ones, right? The small ones have some challenges. The big ones, the most interesting experience is my procurement onboarding as a vendor. And it's always cumbersome. And it's always slow. And it always takes one of two things. One, it either takes what I like to call a procurement angel, which is someone either on the procurement team or the team I deal with, who essentially handholds me through the system and kind of hacks it a bit. Because you'll be months into a collaboration and someone will remember that you need to be onboarded to yet another system. So you either need a procurement angel, or at some point you kick off and call your most senior contact. Now, I'm lucky enough that my most senior contact might be the CEO, so it gets solved really easily. But what happens if that's not the case? So what I do is I always offer a free procurement overhaul workshop. Free of charge. I will do it for you for free, but you need to bring these people in. They never take me up on it, ever. Always, though, it's my default. I can fix this for you, and I'll do it free of charge because everyone will be thankful. It's like, we'll get back to you.
They know the answer. They just don't want to be told it.
They know the answer, but there's so much you need to change inside a big organization, and this one isn't something that is hurting them yet. And to the point you were making earlier, most of the suppliers to a big bank are big corporates who have people facing into this, and managing that inefficiency is their full-time job. So it's fine until DORA comes. I think we'll see a lot of change under DORA. I'm excited about DORA, mostly because I don't work inside a big bank anymore, and that I don't have to do all they're doing. Because you read the regulation and go, oh boy, that's a lot. You know, I was talking to a client the other day, and I was talking about DORA because it's my favorite topic. And she was saying that her husband, who's not in the industry, assumed that she had a new colleague called DORA, because she was talking about DORA. DORA is coming, DORA is coming, DORA is here. It's like, who's DORA? When is she starting? It's like, no. DORA has landed, but not quite like that.
But do you think this is DORA is something that the vendors are aware enough of?
No. I have spoken to a few vendors in the space you and I used to inhabit who were a bit like, well, that's not our concern. It's for the banks. And it's like, no. Because it is, of course, third-party risk is important. Managing your vendors becomes very important. And the regulation is a little bit more loose about the definition of critical infrastructure, because now it extends to important infrastructure. So a lot of the vendors that provide, to the point you were making earlier, a piece of unregulated activity in a regulated function need to be part of the reporting commitments, if nothing else. So if you have, a 4-hour SLA to notify your regulator if you've had an outage, there's quite a few pieces in there that have a responsibility to have alerts, commitments, flags. Now, a lot of these vendors do that anyway, but your SLA might not be there. Your feedback loop to the client might not be there. The reality is DORA is too big, too heavy, and it came a bit late. for anyone to really be compliant in January. So I expect that either the runways for compliance will be very long, or there will be a sort of iteration on the regulation. So there's breathing space, but are people preparing themselves with the urgency I would expect? No, because I think you're right. A lot of the vendors haven't realized how much it will actually affect how they operate.
I mean, I think I know the answer to this question, but it's creating a higher barrier for entry for new fintech innovators, isn't it?
For sure. It's creating a higher barrier for entry. Actually, a lot of regulation that we're seeing come through is raising the bar, which isn't a bad thing, to have that certain degree of robustness and readiness to do the right thing for the consumer. But I actually think that it increases if they implement the regulation in the sort of aggressive posture that you see in the document as it stands now, it will become extremely expensive to continue participating for some of the existing vendors. Because think about some of the systems you and I have come across in our careers. If you need to know within 4 hours, say, of an irregularity or an outage, quite a few of the older systems of the established vendors don't have that kind of visibility. You wouldn't necessarily know until end of day. So for them to participate, the uplift will be quite expensive. I was at a Chatham House dinner, so I won't reference who was talking, but it was someone who is aligned to regulatory work. And they raised a question of, do the authors of the regulation really understand the amount of expenditure it will require to be compliant? And if not, does that change anything? And if yes, is it done because actually it's time? We had real-time connectivity, and yes, it's going to cost a lot, but... And I don't know the answer to that, to be honest with you, because I'm excited about the regulation, but it's like I'm not that close to it. So I don't know the answer, but either could be true.
Yeah, it's difficult because it's both necessary, but equally it's not pro-young business.
No, but if you're sitting on a 1954 mainframe, you won't feel it's pro-established business either. Mm. I think it's one of those unusual moments where everyone feels hard done by.
So, from a fintech sales and marketing perspective, what are you seeing the landscape look like at the moment? And what I mean is, what is effective ways to connect with customers?
So I would say that fintech has come of age, right? And the old adage that bridges are for crossing, not burning, is really important, because the reality are, you start building a relationship with someone today, your company might be acquired, or you might have changed roles before you actually conclude a sale with that person. Mm-hmm. And the degree in which the people sitting on both sides... Okay, I'm unusual, you're right, in that I've crossed that table. But people have sat on the same side of the table representing a different organization several times in all of our careers, right? So the reality is, if you and I start a dialogue, partly you're buying the product, partly you're buying me, right? That's always the deal. You always buy the team. So the reality of that sales conversation is that you might not sell to that person until they're in the next bank. But that sales cycle will be slightly accelerated because they know you, they know your product, they trust you. Or equally, you might not sell to that bank until you're in your next role. And that's uncomfortable for everyone involved, but we're beginning to realize that actually you can't hold those cards too tightly. It's the same people. The industry is not that big. I keep saying to my teams, life is long and the industry is small. You need to assume that you're selling into the organization as well as the people, and you're selling yourself as well as the product, because these people will move and you'll meet them again and again and again. So first of all, you need their trust, because if you lost it 3 jobs ago, you're never getting it back. You need to allow for the fact that if somebody leaves this organization, okay, you're back to square one with them, but you might have a 20% shorter sales cycle in a year's time wherever they land. And that dialogue will be ongoing. So no matter what happens, you need to allow it for it to flow. And that's uncomfortable. It is not how we assume relationships work. It's not how we assume sales work. It's not how contracts work. I have so many mentees who show me their contracts for sales roles in fintech, and they have like an 18-month non-compete afterwards. And it's like, what planet are you on? That's not how it works. And you need to assume that the dialogue will be ongoing, and trust that your product is special enough and that the people you trusted will deserve that trust after they leave you. That's how it goes.
Yeah, and I think the maturity of the sector from a product perspective is important for that, because you've got to deliver on those promises.
Yes, and you need to know that if you don't deliver, you'll get found out pretty quickly, because as I said, the industry is small and life is long.
Leda, thank you very much for joining us.
Thank you for having me. This was fun.
Yeah.